Welcome back, crypto explorers. Today's episode is all about navigating the sometimes tricky waters of cryptocurrency. We'll be unveiling the mystery of taxes and regulations that govern this digital gold rush. We'll also highlight common missteps that beginners often make and teach you how to sidestep them. And of course, we'll expose the dark underbelly of scams that lurk in the crypto world. This is crucial stuff for anyone in the crypto world, so let's dive right in and arm ourselves with knowledge. First up, let's tackle taxes and regulations. Cryptocurrency might feel like the Wild West, but it's not free from the law. Far from it, in fact. Even though it's a digital, decentralized currency, it doesn't mean it's a free-for-all when it comes to taxes and regulations. So let's break it down. In many places around the globe, your earnings from selling or trading cryptocurrencies are considered taxable income. It's akin to making money from stocks, bonds, or any other type of investment. You buy low, sell high, and the difference, the profit, is what's subject to tax. And just like with those more traditional investments, keeping detailed records of your transactions is absolutely vital. Document when you bought, the price at the time when you sold, and the price then. The more detailed, the better. This will not only make your life easier come tax season, but it's also a good practice to keep track of your investment's performance. Now, tax regulations can vary widely from one country to another, and even within different states or provinces of the same country. Some places might tax crypto as property, others as income, and others still might not tax it at all. It's a bit of a patchwork, which is why it's so important to understand the regulations in your specific area. And as if that wasn't enough, remember that these regulations are not set in stone. They're constantly evolving as governments grapple with how to handle this relatively new form of currency. So, what might be the rule today could well change tomorrow. Your responsibility as a crypto investor is to stay informed about these changes. Ignorance of the law, as they say, is no excuse. So, make sure you're up to date with the latest tax regulations. And if you're unsure, consider consulting with a tax professional who's well-versed in cryptocurrency. And it's not just about taxes. There are also regulations concerning how cryptocurrencies can be used, how they can be advertised, and even how they can be created. For example, initial coin offerings, or ICOs, which are a way of raising funds for new cryptocurrencies, are heavily regulated in many places. So, while the world of cryptocurrency can often feel like a frontier, a place of endless possibilities and few restrictions, remember that it's not a lawless land. There are rules to follow and regulations to abide by. And while these can sometimes feel like they're stifling innovation or limiting potential, they're also there for your protection, to prevent fraud and to ensure fair play. So, as you venture into the world of cryptocurrency, make sure you're not just focusing on potential profits. Keep an eye on the rules of the game too. Because while the world of crypto is exciting and full of opportunities, it's also a place where the informed and the cautious thrive. Think of it as a rule book that keeps changing. Stay on your toes. Now, let's talk about common mistakes made by beginners in the crypto world. Avoiding these can save you a lot of headaches and money. The world of cryptocurrency is exciting, but it can also be a minefield for the unwary. Let's navigate this terrain together. First on our list is investing blindly. Cryptocurrency is not a magical money-making machine. It's an investment, and like any investment, it requires diligent research and careful decision-making. The latest trending coin might be tempting, but remember, popularity doesn't guarantee profitability. Always take the time to understand the technology behind a coin, its use case, the team behind it, and its market potential before you part with your hard-earned money. Next up is falling for hype and FOMO, or fear of missing out. Cryptocurrencies are known for their wild price swings, and it's easy to get swept up in the excitement. But remember, the crypto market is not a roller coaster ride you want to jump on without a safety harness. Making decisions based on emotions rather than sound analysis can lead to heavy losses. Always keep a cool head and make informed decisions. The third common mistake is neglecting security. Cryptocurrencies give you the power to be your own bank, but with great power comes great responsibility. Using weak passwords, not enabling two-factor authentication, or storing all your crypto in an exchange are all security faux pas. Treat your crypto assets as you would any valuable possession. Protect them with strong security measures and never share your private keys or passwords with anyone. The fourth and final common mistake we'll discuss today is not backing up important information. Your cryptocurrency wallet's private key is your access to your digital wealth. Losing it is like losing the key to a treasure chest. always make sure to keep a secure backup of your private keys and other important information. And remember, storing this information online can make it vulnerable to hackers. Consider using offline methods like a hardware wallet or even a simple piece of paper. So to recap, avoid investing blindly, don't let hype or FOMO drive your decisions, prioritize security, and always back up your important information. Remember, knowledge is power, especially in the fast-paced world of cryptocurrency. Losing this is like losing the key to a treasure chest. Finally, let's shine a light on scams and fraud in the crypto space. As the popularity of crypto has risen, so have the scams. It's a fact of life that where there's money to be made, there will always be those who seek to exploit others for personal gain. The cloak of anonymity that cryptocurrency provides can be a breeding ground for fraudsters, but with vigilance and knowledge, you can protect yourself. Let's start off with those offers that sound too good to be true. You've probably seen them. Promises of guaranteed returns, risk-free investments, or even free money. These are classic hallmarks of scams. When you see these, your alarm bell should be ringing. Cryptocurrency, like any investment, carries risk. Anyone who tells you otherwise is likely trying to trick you out of your hard-earned crypto. Always remember, if it seems too good to be true, it probably is. Next on our list of scams to watch out for are phishing attacks. Phishing is an attempt by scammers to trick you into giving out personal information such as your wallet password, backup phrase, or private keys, often through deceptive emails or websites. It's crucial to remember that no legitimate company or service will ever ask for your private keys or passwords. Be cautious about clicking on links related to your crypto accounts, and make sure you're only entering your information on secure, reputable websites. Now let's talk about fake initial coin offerings, or ICOs. An ICO is a way for cryptocurrency startups to raise funds by selling their own token in exchange for established cryptocurrencies like Bitcoin or Ethereum. Unfortunately, not all ICOs are legitimate. Some are set up by scammers who take the money and run, leaving investors with worthless tokens. Before investing in an ICO, do thorough research. Look for detailed information about the team behind the project, their plans for the funds, and the viability of their product or service. If there's little to no information available, consider that a big red flag. Last, but certainly not least, we have pump and dump schemes. This is when a small group of individuals work together to inflate a coin's price artificially. They buy up large amounts of a low-value coin, driving up the price. Then, they hype up the coin on social media, drawing in unsuspecting investors. When the price peaks, they sell off their holdings, causing the price to crash and leaving others with a now worthless currency. To avoid falling into this trap, steer clear of investing based on hype or FOMO, and always do your own research before making a decision. Pump and dump schemes are another danger. This is when a small group inflates a coin's price to sell off their holdings at a peak, causing the price to crash and leaving others with worthless currency. It's a ruthless strategy that preys on the uninformed. But now that you're armed with this knowledge, you're one step ahead of the game. In conclusion, scams and fraud are unfortunate realities in the world of cryptocurrency. But by staying informed, being cautious, and doing your due diligence, you can navigate the crypto landscape safely and confidently. Remember, the best defense against scams is knowledge. So keep learning, keep exploring, and keep shining a light on the darker corners of the crypto world. That wraps up our guide on important considerations and common mistakes in cryptocurrency. We've tackled the essentials of taxes and regulations, pinpointed common mistakes to avoid, and highlighted the red flags of scams and fraud. Remember, the keys to success in the crypto world are staying informed, being cautious, and doing your thorough due diligence. Keep these tips in mind, and you'll navigate the crypto landscape like a pro. Until next time, stay curious and cautious in the world of cryptocurrencies.